Hi friends, good week. How are you? Vladimir here. This is the weekly review for 9th of December 2012. Last Friday was a big surprise, especially in the USA, with the great news, I would say, from the job market. More than 140,000 new jobs, employment rate, unemployment rate reduced by 0.2% to 7.7. Everything looks very perfect for USA, but the reality stays the same. The underemployment rate is more than 14%. Too many people mm, left the job market. They are not looking for jobs. Too many people are still making less than the minimum. Too many people still work for partial jobs. And this details is something that will not be published. And these details, of course, come from some behind the scene reports. So the reality is still not that good as they try to convince us with the last news. But you can see that on the market. The indices during last Friday, despite the amazing news, right? That's how it looks like. They went up, and then they understood. You see that? All the retrace down again, which means they are not convinced that the reality is as good as they try to make us think. The question is what's going to happen from here till the end of the month, end of this year. Well, we know that the fiscal cliff is coming closer and closer. There is no real solution as for now for that. And Obama is very busy um, complaining on the Republicans that they do not give him a real support to come for a real solution. From the exactly opposite place, the Republicans blame the Democrats that they try to make something some unrealistic plan. Well, will there be a middle? Most likely, but this middle, at least as for now, looks not enough, not enough at all. And the middle that seems they will at the end reach and find will be just delay the decision. And as we know, delay a real problem just cause bigger problems. So, only 3 weeks to go until the end of the month and end of the week. I just want to remind you this is the last officially week where the traders still trade. Since the next week, many traders will leave the markets and go for vacations, as the weekend after that it's Christmas coming, so there will be no trading, and traders and the volatility will be back week after the beginning of 2013. We still do have some opportunities to attack. I just want to remind you, it doesn't matter if you trade or not. Um, if you still watch this video, probably you are still watching the market. And if you will decide to make a trade, just remember to take very small risk. You do not need to overexpose yourself or over leverage yourself on this stage of the year, on this market condition. Uh, just keep very small risks in case that the things will go under control. You will always be able to get out from the trade with a small loss. That's the idea, how it's correct to trade and to act and to behave on such markets. The things that I found for the upcoming week, well, there are not too many, but still there are a few I do recommend to pay attention to. The first, of course, will be based on the yen pairs, as we know that I've been talking about the yens for several weeks right now, since it was around these levels, and we were talking about the dollar yen, for example, that it couldn't push above 82. It could reach the 84 or at least 83 up to 84 range, and now it becomes very, very visually correct, because if we have this push up, follow my mouse here, if we get this push up here, we're going to have a perfect regular divergence. I do want to remind you that the RSI was around the very extreme at the 80 the previous time, which means this time it could go and create a divergence from the extreme to the next top. MACD could go and follow for regular divergence. And if we take a look on a weekly chart, there's an amazing strong resistance waiting here around 84. There's going to be weekly Bollinger Band duplication. There are several resistances even higher, which means that the dollar yen is reaching the top. And even if we take a look on the monthly chart, which has a monster divergence, even if it makes the breakup, it's going to be limited for at least several months. On the long term, as I said, I do believe the dollar yen could go and gain even 100 or higher for the long run, for several years. But for the short run, which is a few weeks up to a few months, my opinion is that even if it does break higher a bit, there are several resistances waiting on a monthly chart that will make the block and will retrace the pair down to the monthly 20 MA or so. That's why, from my point of view, every push up on the dollar yen and of course the other yen pairs will be limited, and a strong drop down will come right after that. I still think that this trend line is a very, very logical target after the up move and down move back to the trend line, or if things go correct, it starts dropping directly from here and it will take us to around 80-70 or so again. From my point of view, as I said, every up move is just to complete the current bullish cycle and begin the next bearish cycle for the yen pairs. Now let's take a look on the euro yen. I've been talking about this pair as well, and I say that we have to pay attention for 107.40 or a bit higher. It did reach a bit higher and now retracing down. 20 MA of course is a level to pay attention to, but same story. There is a level that most likely will be tested when the right time comes, and I'm talking about 104.50 ish. There is a beautiful trend line right there, so it's going to make a down move from the current place, or it will push a bit higher and then cover it all the way back. So only question of time until this cycle completes. If we take a look on a weekly chart, we can see the same, right? Exactly the same. There are several resistances. There is one perfect here. There's one perfect bit higher on 109. There is one very strong around 110, 111. So the current up move is very limited, and it's well seen. It has clear room to go back to the weekly 20 MA. There is a support 104.50, maybe 104 even. There is a clear place for the euro yen to make the correction before any continuation for the next direction. So I'm very bearish for the yen pairs. I could go on and take a look on the pound yen, which is the same, and CAD yen and Swiss yen and just whatever you want. Aussie yen, the higher we push, the stronger the cycle it is going to build. For the Aussie yen, for example, we can see we could go for Bollinger Band duplication, right? There is a trend line also meeting us a bit higher, so something starting from 87 and pushing a bit higher to 88 or so. Very, 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 very tough level for this pair. This is the trend line. It's a potential also ride on the Bollinger Band, 20 candles, right? There's a monster divergence waiting for us, as you can see here. If it makes the push higher, RSI is going to extreme 80 again. That will be double visit around that. It guarantees a bearish cycle very, very, very soon. Just remember one thing: I do want to keep very, very small risk, as we are talking about the end of the year and fiscal cliff. Such event could shock the technical world. That's why we keep very, very small risk. Right? Remember, that's very, very important. Perfect. So what do we have next on our list? The euro pairs. I've been talking on previous week for the euro dollar and the pound dollar, the two majors. We were talking about the bend-to-bend move and the resistances and the hidden divergence forming. And on the 4-hour charts, we had a beautiful divergence. It was only a question of time until it makes the down move. At the end, it did, and it did pretty impressive. It looks like it might turn to be a head and shoulders on the 4-hour charts for the euro dollar. And if you pay attention, that from these lows, definitely not classical, but from these lows, there is a bearish convergence, which is good because every pullback up should be considered as a sell opportunity. How are we going to look at sell? If it makes the pullback to the 20 MA or so, maybe a bit higher, we're going to look for potential bearish hidden divergence on the 4-hour chart, or we could go as low as for the 1-hour chart and find a bearish continuing or regular divergence there, of course from bit higher levels. And if it keeps pushing down, then hold it very patiently, because it was very narrow band to band, so it could go and drop. It could go even for 20 candles right down. So wait patient until you get some block, and a stop could happen here on the next support, wherever it is. RSI could go for 20, and of course continuing divergence could form on the 4-hour chart. It's still early to talk about that. That's why we need to be prepared for two scenarios. One, if it pushes up, look for sell opportunities to keep pushing the euro down. Of course, if the head and shoulders will be created and broken, so just try to draw that, something like that. Okay? If it makes the break, for example, below the support and the neckline, we could expect for a stronger down move. And in case it does not make the up move, so we can sell, just let it go on the current down move. There is no need to join, and look for buy opportunities right from the support. Of course, with divergence, and we will need to find the daily confirmations. But the low could be very, very good area for a buy. It's still early to talk about it yet, as I said, but it's something we could get prepared to for sure. Same was the pound dollar. Are we talking about that? This is bend to bend move, definitely not classical, as it had some stop here around, but we got oversold. We got a bearish hidden divergence. We got a 4-hour chart continuing divergence, which is very, very powerful. Only question of time until it makes a down move, and it did. It broke through the trend line. It retested that with this flag and continues lower. And if you followed my blog 3 days ago, I suggested take the pound dollar with this break and retest. And my final target, of course, will be on the next stiff support, which is almost here. That's a range of supports we need to pay attention, and that's what I'm talking about. It could go for Bollinger Band duplication, double duplication, until it creates some divergence on the 4-hour chart. Definitely worth to pay attention for this pair. And of course, take partial profits once it gives you opposite sign. What do I mean by opposite sign? For example, there is a bullish hidden divergence forming right now. So take some of the money, put it into the pocket, and let the other part run. Right? Of course, you can trail the stop loss with the 4-hour chart 20 MA, for example. Good. That's about the pound dollar and the euro dollar. I'm bearish yet. I think there is a way to go, but as I said, end of the year, no volumes. Technical sense could turn around, and to remember that, and that's why we keep very small risk. Okay. so we can get out in case it's necessary. New Zealandian dollar, very tricky pair, but I think we are preparing for a beautiful sell, getting ready for a beautiful sell, preparing the area. It could go for a duplication, which means daily Bollinger Band duplication, which means above 0.84, 0.84 or so, maybe even higher. But from other side, on the 4-hour chart, there is 20 candles right already. It's still early because it's not on the top of the band, so it's very difficult to sell that. So I would go and be here very specific. If it pushed higher, we have 0.84 or so, around 0.84. It could be 20 pips lower, 20 pips higher, 30 pips lower or higher. That's still okay, as we have many resistances there. Of course, we will be watching for a divergence there, but also I would be looking for a break down of the support. There's a spike here, spike here, spike here, triple spike around 0.83, 0.5, 10 range. Break below this level, and from my point of view, it opens the doors for the New Zealandian drop down back to this trend line. In this case, if it does not push higher, so we can sell the top, sell the rally, then we can definitely watch for selling the break, but with a tight protection above the last high. We need to be protected here, as I said. Very sensitive market, very small risk, and very clear protection. Okay, protection or exit plan, whatever you choose. Two ways to join the New Zealand dollar from my point of view, which could turn to be wonderful sell. The trend line is the final target. That's my opinion about this pair. Now, another interesting pair to pay attention to is the pound New Zealand, and for that I have to thank Didier, one of the followers, just shared with me. Very interesting situation is going on the pound New Zealand. From one side, the daily chart just broke the Bollinger Band, which means it could go and push for duplication. If it pushed for duplication, we're going to reach the support or so. On the 4-hour chart, though, there is already duplication down, even a bit more. This is not a classical divergence yet, that's for sure, but RSI is playing around the extreme already. This is not extreme divergence which we could trade, even though that the MACD created new low and RSI created the 20, but there is no confirmation on daily chart and nowhere. And we need, right, as this is divergence, we need to find that this is a real extreme, and if we turn it for daily, it's not a real extreme, it's just an out move of the sideways move. That's all, that's what it is. And that's why I would say based on investor style, it's potentially to attack already. I'm not convinced it's going to happen, but the retrace to 20 MA is very, very, very potential. It's too small to it's too small profit to get some big so big risk. So if it makes the next push down, pay attention for the 4-hour chart divergence, pay attention for a potential 20 candles ride on the 4-hour chart, because then and there it could turn to be a very perfect buy opportunity. And of course, the closer we come to the very historical support around 190 or a bit lower, which will provide us a daily Bollinger Band duplication with the 4-hour chart potential 20 candles right, then we can go and start very, very comfortable and convinced we could start the buy. Right now it's too risky yet. Yes, you could start and end the 20 MA. Does it worth the risk? I don't think so, especially not on this condition. Most likely it will make the move to the 20 MA. Does it worth the risk? I don't think so. If it keeps pushing down though with the 20 candles right, pound New Zealandian will turn to be a perfect buy. And of course it leads exactly to the comparison between pound dollar and New Zealand dollar. Pound dollar, technically there is room to go lower. New Zealand dollar technically still could push a bit higher, as we saw, to around 0.84. Remember, we talked about that earlier, and that's why exactly That's the reason exactly why pound New Zealand could push still a bit lower, and to create this divergence on a 4-hour chart with a daily confirmation and provide a perfect buy opportunity. In case it does, then we're going to enjoy for much bigger up move, and that's how I would treat this pair. I've been talking about Euro ZAR for a long time now. Let's just find it. Euro ZAR. And we've been talking that we have a daily divergence, we have a weekly divergence, whatever it does, pay attention what happened on a 1 week trading. Now this week ended as a Marubozu, which means take part of the money. That's what it means. After Marubozu, many times we got the retraces. So from one side it's an engulfing, from other side it's a Marubozu. Correction up is expected. That's why I think take the money, at least part of it, something like half at least. Take it, and if it does make a push higher, jump in again. Jump in again, and then aim the weekly 20 MA. It was a good call from around 11.55, and now euros are dropping fast. I've been talking about dollar ZAR as well several weeks ago, and we suggested that from here I want to remind you this divergence that it's going to make the move, and right now it begins it, as you can see, right? So it could now make a Bollinger Band duplication, right? Right? It could go and take us to the trend line, this trend line, daily chart trend line. So there is there is support around 855, 850 range. So bearish. I keep my bearish expectation for the ZAR pairs, mainly the dollar ZAR and the euro ZAR, of course, pound ZAR as well, but that was a good call for these pairs. And of course, remember the beautiful sell swap. If you sell it, you enjoy swap. You gain some swap, and that's another income. That's another good profit. Regards the gold and the silver, I keep very neutral opinion. I don't want to touch them right before the end of the year in the potential fiscal cliff, so I just skip them. And going to indices, there are several very interesting opportunities, but the main two I have on my list. Well, this is the first one, the Swiss. Okay, the Swiss market index. There is a band-to-band move. On weekly chart, there is a strong divergence. Could it push, and a strong resistance? Could it push higher? For sure, yes. But then it will be band-to-band on a monthly chart. Now pay attention how many resistances we have around. We have one here, one bit higher, one bit higher. All resistances around. So the up move for the Swiss index is very limited. And with the current top and the weekly bearish pressure, I think, well, it could go and ride the weekly band, the higher band, of course. It's very limited from my point of view, and it's going to drop down. The first drop I expected to go to the weekly 20 MA, of course, whenever it's ready, and yes, it could push higher. That's the first one. And if it breaks that and makes it a false break up, then we can open the doors even for 6200s level or so. That's why I think it's good to start as investor style only, of course, not regular style, without any stop, without any exit plan, because it's not needed here. Clear attack of the Swiss index down, small negative leverage investor style attack, and this cycle within several weeks is going to build itself and happen. It could take several weeks, it could take a few months. So this is an investment, and that's why I call it investor style. Another interesting thing to pay attention to is the DAX. And if you've been reading my blog, on Friday I uploaded my review about the DAX, and I think the DAX is preparing for a strong sell. There is a monster weekly divergence. It could break higher. It could break higher, create the next stop and drop like a rock, or it could start immediately right now. There is a Marubozu. There was a doji on Friday. RSI is aiming the top. There is a clear band to band, and as I said, yes, it could push a bit higher here, but it's only a question of time until it drops like a rock. So I'm very bearish for the European indexes, mainly DAX, Swiss index, and also FTSE. FTSE is for aggressive player. That's the one. That's the FTSE. It's more for aggressive player. Same story. There is a divergence. It could push, go higher, definitely, but there is a divergence waiting for us. On a daily chart, it's band to band, so it's all going to be very limited, and we're going to see a strong drop soon. So that's my opinions, and that's the thing I'm going to trade this week and pay attention to. Just quick reminder for the last time, end of the year, fiscal cliff, keep very small risk. It was a perfect year trading, so no need to risk well gained profits on these days. Keep it small, keep it conservative. That's the only way to deal with the markets this period. Thank you very much for your time watching this video. I wish you a beautiful week and good trading.